morning to you, Dharmesh. Let me begin with your take on the big numbers of the day and focus on HDFC and the way financials are expected to move in. Now, from what we saw in the business updates, deposit growth was a concern. The squeeze on NIMs was a concern. Do you think that will be dissipated going forward? Is your bet on banks?
Yeah, good morning. Definitely, I think HDFC would do better than the peers as far as going forward. That is what I mean to say, as far as deposit growth and credit growth is concerned. Because what they have done in the last 2 years, they have made a tremendous expansion on the brick and mortar branch model. So that is going to reap benefits for HDFC Bank now. And I mean, in the benign environment which is there for the credit growth segment, the banks which have a better reach and better software in place are the ones which are likely to get more benefits. So definitely I'm looking forward to it. But this quarter, Q3 earnings won't be great for HDFC Bank as far as, asset quality is concerned, and some slippage on the credit growth side is also likely to be there.
Well, that was Tata Consumers in a conversation with NDTV Profit. Remember, on the 12th, they announced two big acquisitions, Cattle Foods and Organic India, for 7,000 crore rupees. Its pricey valuation, though, indicates the good news may already be in the price. And we've got Dharmesh, who can help us understand that better. Dharmesh, Tata Consumers' trailing 12-month PE ratio is about 54 times. While its peers, despite the pace of sales and profit growth, is still single-digit returns on equity. Return on capital employed as well is also significantly lower than its peers. How does the stock look? I mean, the upside clearly seems capped, right?
Yeah, definitely. I mean, even if they are doing 9 to 10x of what the management just guided, even after that, the run rate would be 20 to 22% only on the revenue front. And the margins, there is no scope of, margin expansion or anything like that. In fact, because of cyclicality of the business, especially the tea business, if organic tea comes into the same segment, there can be downward pressure on the margin. So, but I mean, liquidity is chasing most of the Tata Group stocks and they're enjoying this frenzy. So, enjoy the ride as long as it goes up. But definitely on valuation front, it looks pretty expensive.
Dharmesh, we are gearing up a market opening and it's going to be about banks. And I think with HDFC's 33% weightage on Bank Nifty, those earnings will be something that markets will start focusing on as from the get-go. The stock went home with a gain of 2% yesterday. Any sort of tactical call over here on HDFC Bank? Would you, initiate, like I said, a tactical buy call on the stock at this stage?
Yeah, we are positive on private sector banking space practically as compared to other NBFC or the public sector banking space. But as far as stock selection is concerned, I think the better bet would be Kotak Bank along with ICICI and Axis rather than HDFC Bank, because HDFC Bank has done all the groundwork which is required. But I think still it is 1 quarter away from the actual fruits being fructified. So the branch expansion which they have done, it will take time for them to capitalize on that, and maybe from post monsoon onwards they would like to see the benefits coming out there, and serious money will start flowing into HDFC Bank only when the numbers starts trickling down there, because the people who are to be invested in HDFC Bank, they are already invested. So new money is not chasing this counter. Rather than Axis, ICICI and Kotak Bank appears to be more lucrative at current valuation multiples. So I would like to go through the numbers first when they are out. I'm not expecting much from them, as was updated on the business outlook itself to 12% kind of a credit growth. So it has to be a benign number this time around.
Dharmesh, very quickly, you want to comment on that? Railway stocks, some may argue they look very stretched and expensive after the kind of run-up we've seen. But there seems to be no stopping. I mean, you pick any stock from this pack and the returns have been multifold. Upside still here? Anything that you'd buy from this whole pack?
Yeah, definitely. I mean, we have done this railway thing and on your channel as well. But I think from here on, fresh entry should be avoided if you are short-term or medium-term trader. But if you are investor and looking at 2-year kind of horizon, then still they are good value-wise. I think around 20-30% kind of an upside from current levels are likely on both these counters. And not to forget that when the full main budget would be rolled out, there will be additional 20% kind of a budgetary allocation for the railway companies. I mean, all the railway stocks would be enjoying that, especially the rail infra segment. So that additional revenue will come into play. Management has been very bullish. So they have guided for 1 lakh crore kind of order book by the end of this year. So that makes RDNL, IRCON, IRFC all attractive from that perspective, but definitely not in the short term after the recent run-up.
Dharmesh, I want to come to you on some of the IT pack and HCL Tech down about 2% now, all of them down in the red. Anything that you think is worth picking up right now? Would you wait for further corrections?
No, Tamanna. In fact, yesterday only we gave a call to sell all IT stocks as far as, Tradio thematic basket concept was there. We did have initiated the entire pack about a couple of months back as a buy. The results, the way I look at the results is there has not been any negative news. At the same time, there has not been any positive news. So companies have still maintained that 2 quarters to go before they can see, incremental growth prospects picking up. Till that time, it is more of a constant maintenance kind of revenue and bottom line is where they are looking at, including the margins. So I don't think with such kind of lofty valuations, one should be going into as a positional buy or investment buy or even as a tactical buy. So we would wait for some correction to set in and then we'll take a call as things progress in the US on the discretionary spend and the shift to the product composition on the IT platforms, which has already happened for US companies. Indian companies are still to catch up with that. So it was a hope trade which has played out and still it's a hope trade for the IT basket. So we have given exit yesterday itself for all the IT counters.
I agree, Dharmesh. It's almost like missing the woods for the trees with a lot of these IT stocks. Dharmesh, Polycab it got thrashed in the last couple of weeks with so much of information around that IT raid. The management, of course, has responded. They've said they haven't received a notice yet. And post that, we've seen a little bit of recovery come into the stock in the last 3 days. Also, it remains in an F&O ban, which could be providing some support or preventing a big fall. But fundamentally, this is an event-based reaction on the counter that we are seeing. Keeping that very well in our minds and the clarifications we've received from Polycab, would you use this opportunity to maybe strategically add to Polycab? And this is not for the near term. This is more from a medium-term perspective.
No, see, just a corporate governance issue being raised. The very fact that raid has been conducted and the report is still awaited by the department. So we'd like to see the report first. And there has been speculation, and because of that, the stock has been waiting out there. So that was unfortunate part because let the report come first, and then we see where the management stands as far as corporate governance is concerned. So anything to do with corporate governance is an absolute no for us. But the sector remains very strong. I mean, the entire wire and cable segment is pretty strong for the next 2 years. We see the kind of strength which is there. Even when we talk to all the dealers and the checks which we do, the demand has been pretty strong. So KI Industries and all is a better current juncture. And post the clarification comes and we'll see how to take it forward. As of now, we are not recommending Polycab to our clients.
All right, we'll take a very short break. Thank you so much, Dharmesh and Amar, for staying with us through the morning. It's looking like a bit of a wobbly start for the Indian markets.